Hey, thanks for coming to our Mortgage 101. You're going to learn everything that you need to know about getting a mortgage, whether it's your first one or maybe it's your fifth one, but everything you need to know in today's market. And completely free. If you're, well, like me, if you want to watch a video, of course you're seeing it here, but if you want to download it completely free, just click the link and you can download it right to your computer. And below that, there'll be a form if you have any questions for us, or you can find our number above there if you want to reach out to us that way. So let's get right in. First thing is, Jessica, what is a mortgage?
So if you don't have the cash to pay for a house outright, then you're going to need a mortgage. And we know that this process can feel really overwhelming, but our job is to make it easy for you.
All right, first thing we're going to cover is what do you need to qualify for a mortgage? Well, the first most important thing is going to be your credit score. Most lenders these days are going to require that you have at least a 620 or higher. There are some circumstances where you can go lower than that, but 620 or higher is definitely going to be where you're shooting, and 700 plus is going to put you in the best scenario of getting the best pricing.
Yeah, and another thing is we're going to ask you for a lot of documents, but the reason why this is important is because we're going to calculate your income a little bit differently than you probably would, because we have guidelines that we have to go through. So we look at your credit report, your bank statements, your whole credit history, your income, and we make sure that all of the numbers line up because we want your debt to income ratio to be in the best place and also within the budget that you want.
Exactly, and we're your advocate. So a lot of people think that hiding things from us is going to help in the process, but no, that stuff always comes back to bite you in the butt. So the thing is you want to tell us everything and anything so that we can structure your loan to get you the best terms and make sure it's going to go through. And if we see something that could be an issue, we can address it up front and we can get that covered before you start putting money down for earnest money, down payment, inspections, things like that. All right, so now we're going to go through the process. So the number one thing that you have to do is choose a lender. Jessica's going to tell you why that's important.
So who you work with matters. Not everybody is going to be available to take your calls whenever you need them. You don't really want to be waiting on the people that are going to be, issuing your pre-qualification form. And also some of the banks do charge a lot of fees that you don't want to have.
Exactly. So you just have to make sure that you're choosing somebody that you trust. We recommend a local broker, and that way you know what you're going to get, transparency, and everything's going to be taken care of for you in terms of customer service and pricing and what you're paying. So next thing we're going to go to is your loan application and your pre-approval. So once you choose your lender, you're going to fill out an application for them. Nowadays, most of it's going to be online, so it's easy for you. And then that comes to uploading your documents. And for us, you can do that right through a secure portal. And Jessica will tell you some of the documents that you are most likely going to be uploading.
Yeah, so it's pretty easy. Driver's license, 2 months of bank statements. We're going to need 2 years of W-2s and taxes, and the last 30 days of pay stubs. So not anything too crazy. If you own rental properties and stuff like that, you might have to upload more, but really that's about it.
Exactly. And so then once that happens, then we can actually issue the pre-approval. Once you have the pre-approval, you're going to know what you're qualified up to. And the biggest thing is making sure that whoever you work with, they're going to tell you exactly what your all-in payment's going to be, including your principal, your interest, your taxes, your mortgage insurance if you have it, your homeowner's insurance, and if there's an HOA.
It can quickly spiral to being out of your budget if you're not paying attention to it.
Right, so don't get duped by the online sites that just show you a principal and interest, and you're like, oh, well, online it said this house can be this, but it was way more. Just, you gotta make sure you work with someone that shows you the numbers. So then once you have your pre-approval, it's time to go house hunting.
Your favorite part.
Yeah. And so, yep, you go house hunting, get linked up with a realtor. If you don't have one, we always know people that are experts in each specific area, and the importance with the realtor is making sure it's somebody that can negotiate on your behalf and knows the market to make sure you're going to get the best deal possible. So then you're out there, you're house hunting, you put in an offer, and then we go into accepted contract.
Gotta love accepted contracts. So then it gets sent to me, and we get fees from the title company, and we put your loan estimate together. That usually happens within 3 days of going under contract, and there's not much more to it than that. You go into underwriting right after that. The inspection happens. We order the appraisal. By then you should have already gotten an approval. That's it.
Yeah, it's pretty nice. So after very beginning of getting your documents in and going shopping, all the heavy lifting is done by you. Yeah. All the rest of it is done by us. And then Jessica just stays in touch with our underwriter, make sure they have everything they need. We get through underwriting, and this whole process usually takes anywhere from 21 to 45 days, depending on the scenario. It could be less, it could be longer. It really depends on the situation. So then once we have everything through underwriting and we call it clear to close, that means you're good to go. What happens next?
Then you get the keys. You sign the final loan package with title, and you're all done.
Yep, and we call that closing. So we call it going to the closing table, and nowadays you're going to be doing that at home. So somebody's going to come to your house, you just sign there, and then after that's done, then you get the keys. All right, so now that you know the basics, let's dig in a little bit deeper for people that like to know. It's going to be the types of financing. So the three types are conventional, FHA, and VA. So Jessica, tell us a little bit about conventional.
So conventional, you're typically going to have a credit score above 680. We really like to see above 700 because then debt to income ratio guidelines are less strict and you can get a little bit more bang for your buck there. Your rates are also going to be much better once you're above a 700. If you put 20% down, you won't have mortgage insurance. But if you're a first-time home buyer, you can get in for a house with as little as 3% down.
Yep, 3%. And I would say the normal is somewhere between 5 and 10%. That's like the average. But you can go as little as 3% and as much as you want to put down, but over that 20%, that is going to make sure that you don't have mortgage insurance. And the more you put down, that can factor in a lower mortgage insurance payment as well.
Yeah.
So if you're not quite at 20, but you do 15, it will be lower than if you do 3 or 5. So Jessica, let's roll into FHA.
Okay, so with FHA, you're going to have 3.5% down and then an upfront mortgage insurance premium of 1.75%, and that's of the loan amount. You do have that mortgage insurance for the life of the loan, and then you also have monthly mortgage insurance on top of that. But that upfront premium does get rolled into the loan. I know that it sounds confusing, but when you get like a fee worksheet, it'll have it all spelled out in there for you.
And so in most cases, the rates are a little bit lower on FHA than they are for your conventional, but it's because you have that lifelong mortgage insurance, and that mortgage insurance is usually much higher. And so the good things about FHA is if you just don't quite have the credit score but want to get into a house now at today's prices, you can leverage that FHA program and you can always refinance into a conventional once you have 20% equity, and then that mortgage insurance is gone. So now that we know those two, Jessica, tell us about the VA loan.
VA loan is my favorite. So you have 0% down. And then you don't have any insurance, any mortgage insurance, unless you have a funding fee. Funding fee is exempt if you have a 10% or higher disability rating. So it's a fantastic loan. Really great rates. You don't really have to have a lot out of pocket to get into it. And they're also a lot more lenient on the debt to income ratio.
Yeah, so if you're a veteran, it's almost 100% every time that you want to go with the VA loan. There are some exceptions, but it's a great program for people that have served, and thank you for your service. And that is the 3 different loan types explained. All right, next thing that everybody should know is what are the costs of doing a loan? Jessica, what's one of the costs?
Earnest deposit. So you put down, can be 0.5 to 2% we've seen for when you go under contract. It's kind of like a security for the sellers.
Yeah, it just makes sure that you are actually committed to going in on that property. So the next thing is your down payment. And we've already discussed this, somewhere between 3 and 20 or more % down. So you'll definitely have to have that. Usually within 2 weeks of closing, would you say, needs to be available in your account. So if you have it before you start, even better. But you have to make sure that that is in your account and good to go within 2 weeks of closing. And a big thing I gotta say here, no large cash deposits.
If you're going to move money around, it has to be trackable. We have to have a paper trail. So if it goes from one account to another, we have to show the account that it originally came from, and no cash. It never works.
And that money can't come from somebody that is not on the loan unless it is a close family member, and then they have to sign a gift of equity that they're giving to you as a gift and not a loan. So there's a lot of little details when it comes to the down payment. Another thing, 401k.
Yes. Love 401ks.
401k, a lot of people don't know this, but this is a great way to be able to source your 401k, or your down payment money is with your 401k. So if you have a 401k that you've been saving up for and you want to leverage that and pull some of that out, you can use some of your 401k towards your down payment. It's a great way to be able to get into a house even if you think you didn't have a down payment. And the last thing, nobody likes them, but they are part of a loan, and that is closing costs.
Yes, so you're going to have title fees. They're typically around $2,000 to $3,000. We can't do anything about that, sorry. You're going to have the appraisal cost. You're going to have your escrow account, which is going to be the taxes for your property and the homeowner's insurance policy that you choose. So even if we give you like a fee sheet, kind of estimating what they are beforehand, these are items that you're going to have control over. And then you're also going to have prepaids. You're going to have prepaid interest from the closing date to the end of the month. And you're also going to have your homeowner's insurance premium. You do have to pay that annually. So you pay the first year up front, and then the escrow account is kind of like a savings account that holds it for you, and then they make the disbursements whenever everything is due.
And for the taxes as well.
And for the taxes, yes.
Yep. And the biggest thing that we help with is, as local brokers, we do not charge any upfront lender fees, processing fees, underwriting fees. So that usually saves our clients somewhere between $1,500 and $3,000. So just make sure you're aware of that and ask the lender that you're working with, do they charge lender fees? Because if they do, you might be overpaying by quite a bit. So that's a quick round out of what all the fees are when you're closing on the house. But if you have specific questions about these, please reach out. All right, we touched on this before, but this is very important. What are all the different pieces in a mortgage payment? A lot of the online calculators don't include everything. So Jessica, what's in a mortgage payment?
Yeah, so we call it PITI. It's your principal, interest, taxes, and insurance. And then we're also going to add in mortgage insurance on there. So all of those numbers have to come together, and they all get paid together unless you decide to pay your escrow separately. But make sure that you know that you do not pay interest on your taxes and insurance. Everybody that I talk to that says that they do not want to pay them all together thinks that they're being charged interest, and that is not the case. It's only on the principal balance.
Right, and probably these days we see probably 90 to 95% of people pay this within their escrows, within their payment, because the lenders reward you for a lower rate.
Yes.
All right, so now we're going to cover some additional terms that you need to know, and the first one is going to be a fixed rate mortgage versus a variable rate mortgage, or an ARM.
Yeah, so we haven't done really very many ARMs because rates are just so amazing right now. So when you get a fixed interest rate, you're going to have that rate for the life of the loan. So if you get a 30-year loan, you have it for 30 years and it's not going to change. Whereas the variable interest rate, you usually have the same rate for a little bit of time, depending on exactly what it's for, and then it adjusts. And right now, you really just don't need one of those.
Right. And they also call it an adjustable rate, so it can be variable, adjustable, whichever words, they're interchangeable. So now that we know the different rates, Jessica, what's an APR?
So APR is your annual percentage rate, and that is going to be always a little bit higher than your interest rate because it will include upfront mortgage insurance premiums, VA funding fees, and then discount points. So if you pay points, it'll be reflected in there as well.
And I'm glad you brought that up because that's our last topic, is the discount points. So when people say paying points, what exactly does that mean? That means that you're going to pay extra money to get a lower rate. And Jessica, what is your thoughts on paying points for a lower rate?
It really depends on what your intentions are with the property that you're going to be in. If this is your forever home, then it might make sense to buy down the rate a little bit. But most people are, on average, aren't in their home for more than 7 years.
Right.
So, you might have the intention of being there for a while, but that does need to be taken into account, especially if this is your first home and you don't quite have that big family yet. We found out very quickly ourselves that you really grow out of a house faster than you think once you start adding kids to it.
Exactly. So that's a discussion you want to have with your lender, and we do that with our clients and show them what the no or low cost rate is compared to paying some points, and then we kind of help them weigh the decision on which one's going to be best for them. All right, now we're on to budget. This is one that most people don't want to have to worry about, but it's extremely important that you know your budget going into buying a home. So Jessica, you want to break down the budget a little bit here?
So there are a lot of different factors that are going to go into your budget. You're going to want to take your income, and then you want to subtract the expenses from it. So I know on video this doesn't sound like the easiest thing, but if you go to the link and download that packet, there's a whole sheet on there for you that breaks down all of your expenses. Because sometimes you spend money on things and you don't realize that you're spending it. So tracking those habits is really important to see how much extra income you have and what would be comfortable with your budget.
Right, just because you can qualify for a mortgage doesn't mean it's the right decision to do, because you're going to be tapped out, and we call it being house poor. Too much house, not enough income. So it really comes down to what you're comfortable with. And if you want to see kind of what payments are, you can either reach out to us, or you should be able to click up above and bring down the drop down, and there's a calculator that you can go to, and you can calculate different payments for different houses. So it's very important that you know your budget and that you're comfortable with what you go into for your all-in payment when buying your next home. All right, next steps. So when you are ready to at least have a conversation about buying a house, looking at numbers, making sure everything works, we're happy to help you. Reach out. There's our phone number above. There's a form to fill out below. I know everybody likes to do it differently. Our number, you can text us. We're always available. We just want to make it easy and make ourselves accessible so that you have everything you need to be successful in buying your next home. Anything else to add, Jess?
If you want to download this, click the link above, below. It'll be somewhere around there.
And even if you don't choose to use us, we just highly recommend that you use somebody local, preferably a broker, because you're just going to get the best terms, the best rates compared to most other lenders, and you're going to get the service. So you're going to have, our personal cell phone number. Most of the brokers I know, it's the same way. And when you're buying a house, especially these days, you want to have that peace of mind that you're working with somebody that you trust, and they're not going to switch the numbers up on you, at the last minute, which happens a lot with the online lenders. That's kind of one of the things that they kind of practice. We won't go too much into detail on that, but the biggest thing is just making sure that you're happy about the experience and you get the house that you want at the price you want with the payment you want. So reach out, and we're always happy to help.